Hey everybody, it's Jack and welcome back to another video. I hope you've all had an amazing long weekend. Hopefully you got to get outside or relax and recharge. But since it is the weekend, it is time for another WealthSimple portfolio update video. If you're new to the channel and wondering what it is that I'm doing, I'm currently undergoing a WealthSimple Trade challenge where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing. So I deposit around $200 a week into my account to invest into the stock market. We just finished week number 16 of my WealthSimple Trade challenge, and it was a pretty flat, steady week for the stock market as a whole, which is a little bit different from the past few weeks that we've seen as we were starting to see some crazy volatility in the market. However, it has calmed down a bit over the past week, and we'll dive into all of the stocks that I either bought last week, as well as if there's any that I sold, and I'll get into my thoughts and watch list for the week ahead. So let's dive right into all of that. Over the past week, my main focus was really adding to some of my more solid core positions in dividend growth stocks, really chipping away at adding to quite a few different positions that I have, as some of them actually came down in value and are great long-term buys at these current prices. So I'll definitely go over all of that, but jumping into what my portfolio is currently sitting at, and the account status is currently at $5,270.55. So actually down around 0.5% on Friday of last week. However, we still finished up for the week. We were up $19.87 or 0.38%, which means that all time right now, we are actually still currently slightly down 0.44% or $23. So pretty much break even from where we started. And we'll get into why that is, but it's mostly because of my growth stocks, which ironically are not growing. So let's now dive into my Google Sheets spreadsheet where I track all of my stock positions as well as my passive income from my dividend stocks, which is a really easy way to really track your progress and see those dividends start to grow over time. So let's hop in and check it out. Alrighty, so we are now inside my Google Sheets portfolio tracking spreadsheet. And I first want to address what some of you guys have been pointing out in the comments over the past week, that the dividend per share column right here is currently not working. I've been trying to find a fix for this and I'm still working on it, because this column actually automatically pulls data from Yahoo Finance and it uses some code, as you can see up here. And the code is quite complicated and it's actually doing quite a few different things. But it seems that currently there's something on the Yahoo Finance end where it's not allowing us to fetch the data properly. So I am still currently working on a fix to this, and hopefully it will be done by next week's video where it will start to be automatically pulling the data again. But in the meantime, what you can do is head over to Yahoo Finance for your stocks, and this is where the data is actually being pulled from if it's working correctly. So you just grab this value right here, the forward dividend, not the percentage, just the forward dividend. So for Algonquin Power, it's 84 cents. And if you hop back over to the spreadsheet, you just put in your 84 cents. And the other two columns, dividend yield and annual dividend, will automatically populate based off of that column data. So all you have to do is take a minute or two to go through Yahoo Finance for your stocks, and you can manually input this if you don't want to wait the week and you want to get your dividend yields and dividend per share back up and running. I know it's a slight pain, but it's a quick fix for currently before I can update and get the spreadsheet automatically pulling the data again. So I've gone ahead and manually put in the dividend per share for my stocks within my portfolio. So if we jump now into the stocks that I added last week, I added across multiple different positions, all dividend-based stocks. So I really focused heavily over the past week on adding to my dividend stocks and really boosting that passive income. So starting at the very top, Algonquin Power and Utilities, I added another 2 shares to my position over the past week. I added one around $18.40 and one at $18.30 because I currently think at these prices, Algonquin Power and Utilities is a great buy. It offers a 4.5% dividend yield at the current price and is also sitting at a PE ratio just above 10, which is great value for this great dividend growth stock that over the past 5 years has seen super steady and reliable growth and is currently in a huge dip over the past few months. We saw it go from $22 to where it currently stands in the mid $18 range. I think this is a great buy currently for any long-term dividend investor. So the second dividend stock that I added to last week was Manulife Financial, ticker symbol MFC. This is one that I started a position in a few weeks ago, and I've just been continuously building up over the past few weeks, adding a share or two here and there. So Manulife Financial is currently 3.8% of my portfolio, and I currently have 8 shares for an average cost around $25.83. So I am currently down around 4% on this position. This is a stock that currently offers around a 4.5% dividend yield and has continuously been growing its footprint in the overseas market. So for this reason, I'm going to be continuously adding to this position over the coming few months and really just starting to build it up into a larger position in my account. So the third dividend stock that I added to last week was one of my main and largest dividend stock positions. It is TELUS Corporation, ticker symbol T. This is a telecom company that offers a great dividend of 4.7% at the current prices. This is one that has a great track record for continuously growing its dividend every single year and seeing really strong share price appreciation. This is one that I see getting to that $30 range over the coming year or so and still offering that really solid dividend. So I will continuously add to this one as well. And then the next dividend stock I added to was Enbridge, ticker symbol ENB. This is in the oil and gas industry, and Enbridge has been seeing quite a significant dip over the past few weeks as the whole situation in the US around hacking the different pipelines and the different shutdowns that they had. But this is a very small and minor setback in the short term. So as a long-term buy, I just saw this as a great buying opportunity, and I added one more share of Enbridge. So I now have around 5.3% of my portfolio in Enbridge, and it currently offers above a 7% dividend yield. So this is again another great stock for passive income. And the final dividend stock position that I added to last week was Canadian National Railway, ticker symbol CNR. This is my newest position in my portfolio and one that I've just started a week or so ago. I had one share. I now added a second share over the past week. I added a share around $128, but over the past few days, as news came out that they actually won the bid for Kansas City Southern and are able to acquire them now and have beat Canadian Pacific Railway, they have seen a share price go down even a little bit further, as I am currently down 4.7% on this position. I really think that this is a great long-term buy as it's one of Canada's top dividend growth stocks. It's been raising its dividend at an annual rate of 15% over the past few years, which is truly crazy. And again, as I've said in previous videos, I think in the short term, this stock price could continue to drop a bit as they probably did overpay for the Kansas City Southern deal. So in the short term, this might cause it to sell off a bit more, but in the long term, this deal really helps to expand their tracks in the US. They now have North America covered. Diving into the passive income side of thing and my dividend tracking, we can see that I had quite a significant increase in my annual dividends over the past week by adding to those various different dividend stocks. We saw my annual dividends go from $125 to over $139, so an increase of almost $15 in my annual income from my dividends. And the monthly average went from $10.45 all the way up to $11.59. So we added an extra dollar of passive income for the rest of our lives on a monthly basis, which again is pretty crazy. So again, I can't stress enough that by just chipping away at a couple dividend stocks a week, you can really help to increase your passive income and start to get that snowball rolling that in the long run will allow you to retire off of your dividends. And now looking at the portfolio breakdown of my portfolio in the chart, you can see the different weightings of all of my positions. So you can see that Algonquin Power is my number one position, sitting at 9.2%. Followed by TELUS at 8.6, and then you have some of my growth stocks in Standard Lithium at 7.5 and H2O Innovations at 7.9. And then the rest of my positions all kind of fall into that 4 to 6% range. And now looking at the sector allocation, we can see that over the past few weeks, by adding to my kind of lower weighting sectors, I started to bring them up, starting to get a much more equal distribution across sectors in my portfolio. The renewables sector being the largest in my account, sitting at over 19%, but it's definitely started to come down. I think it was at 25% at one point, so definitely starting to see it equal out and average out a bit more. Based on the sector allocation, I'm still going to add to my rail transport and Canadian National Railway, as well as my REITs, as it's only 3.9% of my portfolio, as well as the financial sector, continuing to bring it up by adding to some of those bank stocks and Manulife, because it's only at 7.1%. And then if we look into my asset allocation, we can actually now see that the breakdown is almost in that sweet spot that I'm looking for, around 25% of my account in growth stocks, as well as 20% in ETF to give that diversification into the US stock markets through the NASDAQ 100 and S&P 500 ETFs. And then around half of my portfolio is in dividend stocks to just give that passive income that one day I can retire off of, which leads nicely into the weekly watch list for the week ahead. For the growth stock positions, my dividend growth king, I'm going to be adding to Canadian National Railway. Again, I'm going to add my third share next week as it has continued to sell off from where my average price is. Around $132 is my current average price, and it's currently trading at $125. I think under $125 is a great pickup for the long term in Canadian National Railway, as it's currently sitting around a PE ratio of 25. And I think 25 is a really nice PE ratio for Canadian National Railway in the big picture with the new acquisition. So I'm definitely going to add in one more share, hopefully under $125. Ideally, maybe around the $123 range if it sells off early into the week next week. And for my more dividend stock positions, I'm going to be adding to TD Bank. This is one that I've been talking about over the past month or so. Finally, bite the bullet and add another share over the coming week. And the reason I'm now going to be adding another share of TD Bank is because actually since March 2020, the banks, all the Canadian banks have been under jurisdiction. All the Canadian banks have actually been under a regulation that they cannot buy back shares or actually increase their payouts, being their dividends, because they want to make sure that these banks have enough cash on hand if anything were to happen and they had to start paying out some of the cash. So they've actually not been able to increase their dividends, but the economy has actually recovered extremely fast from the pandemic. And the banks are now sitting on quite significant cash piles that they can't do anything with currently because of these regulations. And here's a really great chart that shows how the ratio of the cash pile on hand as a safety net for these banks has really ballooned over the last year. And we can see that based off this ratio, TD is currently sitting in the best position out of all of the Canadian banks. And for this reason, I think once these kind of regulations are lifted and the banks are able to increase their dividends, I think TD will be able to increase its dividend by the largest percentage. And not to mention that TD has already been increasing its dividend at the highest rate over the past 5 years. But again, this is just a really cool thing to think of, that once these regulations lift, these banks are going to be lifting their dividend and raising their dividend payouts. So definitely going to hop on the banks and add another share of TD Bank over the coming week. And finally, the last dividend stock on my watch list is Smart Centers. So just want to increase my real estate investment trust positions and bring up the weighting of them in my account. I currently only own Smart Centers as my only REIT, but again, Smart Centers is one that pays over a 6.8% dividend yield and pays out monthly dividends. So it really just helps to boost that dividend and passive income every single month. So there you have it. That's kind of my watch list for the week ahead. I'm really just focusing on two main positions when it comes to stocks that I'm going to be adding next week. In Canadian National Railway, CNR, this is one that I've been adding one share a week over the past few weeks. And as we saw last week, the news was confirmed that CNR actually won the bid for Kansas City Southern and Canadian Pacific actually pulled out of the race. And then the second main position that I'm going to be adding to next week is TD Bank. First off, I think the Canadian banks are some of the best dividend stocks out there. And as I showed, the banks have actually been blocked from raising their dividend over the past year. But I think in the next 6 months or so, that's going to be lifted and we're going to see all of the banks raise their dividends. But I just think TD has right now the best position and has been raising their dividend over the past few years the most every single year. So this is a great one for me to hold long term and just really capitalize on them raising their dividends on a consistent basis. So this is going to be my other large position added over the week. So I hope you guys enjoy this video. As always, smash that like button if you did and subscribe to the channel. Lots more content coming your way.